Hello, everyone, and welcome back to Genius Wednesdays. I am Christina Bruhan with Coin Genius. Today is Wednesday, June 10th. We are in the middle of pandemic and lots of crisis and controversy as usual. So we are missing our head of market research today, Mr. Steve Kwan. This is week 2 of the riots in Chicago, and so he will not be joining us. But we do have the rest of our team here, and we've got some pretty interesting insights into macros, political movements, COVID, all kinds of fun stuff, and the announcement that we've been in a recession since February. So that's super interesting, and CoinGenius called it, and we've been saying this stuff for a while. So it's fun to be right, even in these dark times. So that being said, I will turn it over to Team Genius here for the weekly analysis. Mr. Jeremy Bourne, would you like to start with the recap of this week?
Thank you very much. Absolutely. It's been an interesting week. I would argue that stocks have really stole the show from cryptocurrencies specifically this week. There's been a lot of stocks and traditional equities that have mooned, as they say in crypto. You look at Hertz and you look at some of these other companies and penny stocks, and you see these millennials looking at things like Robinhood, the app, which is a much more seamless experience than what is traditional and, going to E-Trade. They're leveraging this in a very interesting way. And a lot of people suspect that, doing calculations in terms of the stimulus money that was given to people and the fact that they use that stimulus money to buy penny stocks. And now some of them are doing extremely well. So it's interesting to see what's happening, but it has stolen the spotlight a little bit from the crypto world. Crypto world is pretty interesting in the sense that Bitcoin is relatively flat over the last week or so, some ups and downs, but overall, the story is really about the altcoins and some of these altcoins, gaining, 75, 100, 150% just over the last week or so. So we're seeing a lot of liveliness in the cryptocurrency market as well. Right now, it's about throwing a bunch of darts against the wall and see which one actually hits, because that's really what it's about. Nobody knows why certain things are pumping and why they're not. But I think overall, I'm pretty optimistic in terms of the future of crypto and where everything's going right now. I think we all agree on this call because we've been talking about it for the last few weeks and actually the last few months in terms of the stock market being completely overinflated. Nobody understands the reason as to why it's doing what it's doing. And I always go back to saying, I like to think like a whale. What would a whale do to fool me, right? A whale would make me think that the opposite is actually going to happen. So when everybody thought that the market was overinflated, right, and that it was just about to drop and it was about to pop and go down tremendously low because of all of the factors associated with, disruption to supply chains and all the things we talk about, guess what? It did the exact opposite, right? And certain people that were hodlers over the long term and people that are betting on companies that are bankrupt, like Hertz, actually were the winners, which is very interesting. So with that said, I'm going to pass it over to everybody else because this is a very weird time we live in. I think the writing's on the wall. I think they fooled us once. Shame on me. Fool me twice. Shame on you, right? So for us, it's about setting ourselves up for success as to what's coming next.
Right. So my embarrassing story on the heels of that is that I did yesterday buy some calls in Hertz, figuring I'd ride the momentum swing. And it did for a day. And then this morning I saw on the news that NYSE had sent them a delisting notification and it plummeted back down again. And I did get out for pretty much what I got in, but yeah, so there it is. Okay, nobody cares, or everybody's on.
No, I do care, but here's the cascading impact of that. So I don't know if you guys have ever dealt with the enterprise fleet market. So about 20 years ago, I worked on a startup with General Electric, and what we're doing was shortening their condition reporting process. So basically, like where you turn a car in, it has to be picked up, it has to be assessed. It then goes to like one depot, and from one depot, it has to be processed. It may have to be fixed, have stuff done to it. And then it typically goes one of three places. It goes into a dealer network, if we're talking about BMW finance, but otherwise, if it's like GE finance, it goes to Manheim, it goes to the auctions. And so I think the challenges that we're going to be faced with short term are there's still people buying cars, and there's still people buying new cars. But with Hertz being delisted and the impending collapse of the rental car market and the rise of not just Uber, but all of these car share applications that are out there, like, Get Around, for example. I think what we're going to be seeing is a glut of these things being liquidated into the market in very fast fashion. And so it may not take place this quarter because it's going to take them 90 to 120 days to move all that inventory. But all of a sudden, every single major car auction in the United States, and there's about 20 of them, is going to be faced with these massive, massive gluts of excessive inventory that they know that they're not gonna need, that they're probably liquidating at cost, or they're returning back to creditors. And if they're returning these vehicles back to creditors because these are large-scale fleet leases that might be just a year, we're talking about credit impacts. And then to follow on the heels of what Josh is talking about, the thing that's been on my radar is, we were sharing memes about oil. What was that, Christina, only about like 3-4 weeks ago?
Yep.
And the one was I'd sent her one where there was a barrel of oil in the McDonald's dollar menu. I'm loving it, but the longer term impact of that has yet to be felt. I mean, the mainstay of money right now in oil is being made in the storage. It's not being made in the sale or the processing. And that's going to be catastrophic, I think, longer term, because they're not building out additional storage facilities. They're kind of managing what they have. There's diminished capacity across the United States because people aren't traveling the way they used to. There's diminished capacity around the world. The only place you're seeing increased capacity is with diesel production, and that's in Latin and South America. And so you look at that and you say, okay, well, what happens next? Well, the marker that we're looking at, and I think this goes to a lot of what we talk about with blockchain and digital transformation, is that we are upon an era where if oil does collapse, and it's really more, I think, of when oil does collapse, it's going to have a cascading impact very much like 1929. We're in the precepts of a depression right now. This is like starty point, right?
Yeah, I would agree. We said that back in April at our collective intelligence event, that based off of just the supply chain interruption from China to America, that we knew in February that this was just going to have cascading effects. And here we are in June, we're just starting to see the impacts from stuff that we identified back in February.
Right. But think about this. If oil collapses, okay, you're going to have a secondary. We'll be okay in the United States because we will still have some smaller producers like Occidental Petroleum that are cash rich and will still be around. But the price of gasoline will become European prices. Okay,
well, I don't want to get too far in the weeds, but I mean, just I want to see the fall of oil. I want to see the emergence of renewable energies, and I think that turns into a really interesting conversation about the Darwinian evolution of this global economic engine.
Right, but look, when I was at The Economist in 2009, we built a project for Chevron called Energyville, and I actually built a video game with Economist data that was very much like SimCity. But what we're doing is we're saying power it with, okay, here's a bunch of renewables, here's a bunch of traditionals. And what you found was that you couldn't necessarily rapidly shift into the renewables without there being a drift period. So what we're saying is even with new technology, there's going to have to be a cutover. Are we moving to electric trucks? Are we moving to electric retrofit? What are we doing? Are there going to be the electric charging stations that are necessitated? How are people going to deal with the long Tesla lines that no one talks about at these charging stations, which can be 3-4 hours at some points? And how's that going to impact logistics and shipping and transportation? So when oil falls, transportation gets impacted, logistics gets impacted. But here's the bigger marker. Those oil companies are propped up on trillions of dollars of loans that are held by a handful of big banks. And what we're talking about is the 2008 bailout was nothing compared to like when oil goes down. And what we're going to be looking at is 3 to 4 major foreign banks and potentially 2 major US banks hitting the skids. That's going to affect their stock prices. That's going to affect the market. That might knock them out of the Fortune 100. And at the same point in time, that pushes us into stagflation. And I think we're about 90 to 180 days out from that.
So that sounds about right. And if Steve was here, I'm sure he would agree with you. He's been talking about the oil, manufacturing delays in that supply chain for a long time now. I mean, not being able to store Oil, not, I mean, they stopped refining for a while. I mean, the production of oil has been absolutely affected. There will be price and market changes because of it.
Right, but then there's the change management piece. You know, with income disparities and a whole bunch of other things that are out there, and people having to get around. How are you going to convert, you know, a country that has vehicles up to 40 years old? Look, my car is 20 years old. Okay.
Yeah, that's the infrastructure problem that we've talked about for the last 20, 30 years is you need enough charging stations, supply and demand. I feel like we're getting a little bit in the weeds on this one, but I agree with you. I think it's a monster problem. And I think that the data is overwhelmingly going to say that we're going to have to move away from fossil fuels. It's just the only way that we're going to be able to evolve.
I think we're gonna have to phase it, and you know, very much like the beginning of the first episode of the reboot of Star Trek, where he's running out in that, you know, 60s Corvette, which is still gas powered at that point. There's going to be a market for it in the future. It might just be a specialty market.
So Oz, do you think that phase out happens while Trump is in office?
That's easily. See, here's the thing: Bernie Sanders, and if you read his economic proposals, and I read all of them, what he was talking about was going in and offering incentives and this and that. If you don't have industry buy-in in these things, it's not going to happen. I don't care how many incentives that you put out there. And so what's going to have to really drive this, and you know, Trump does have a green bent, and he's had a green bent for a while. The problem is that it has to be business first. It has to be something that creates jobs. It has to create utility. It can't just be something that's being picked up as like a national or state service, right?
Okay, wait, and we may be getting off track, so Christina can rope me in here, but in terms of Trump having a green bent, all I keep hearing about is how he's dismantling the EPA and allowing for drilling in places that shouldn't be drilled, and by the way, that's in the context of the flood of oil.
He's pushing everything down to, he's made it a states' rights issue. And we are a republic. And a lot of people look at the EPA as kind of the standard bearer of how they work.
So lawyer, federalism, all that kind of junk here, it's not a states' rights issue. It is absolutely not a states' rights issue. Just because the park may be located in a state does not make that a states' rights issue in, you know, the grand scheme of things. I think he's done that because it allows him to rely on Republican states to do stuff that he otherwise would have trouble doing.
No, I think what it does is it allows flexibility for companies that are trying to basically leverage American resources, and a lot of this goes back to it goes back to strategic defense. Like, look at what just happened to our supply chains with China. 96% of them are disrupted. You know, the basically repealed in NAFTA, and the update allows us to actually, and this was in partnership with Democrats, allows us to support our unions, our jobs in America. And basically kind of rebuild, because I was in Pennsylvania when NAFTA was passed. I was, you know, in college. And I remember half of my friends that were finishing, you know, degrees at like GMI Kettering, or, you know, even going to like advanced mechanics or mechanical science degrees, or engineering degrees, they lost all their jobs. They literally had to pivot. And you had an entire generation of kids that no one talks about that got completely screwed by the system because their jobs got exported to Mexico, you know, where that $40,000 a year job is now $10 an hour, $11 an hour, and they're offering you to live in a pueblo, or they're sent to Canada, and you know, the disruption to the American supply chain was complete, in terms of just domestic capability. Now that's what he's trying to move back to. Is it the best and most efficacious way to do it? Probably not, but it's a step forward.
I'm gonna call BS on the idea that any of that had anything to do with Trump having a green bent, but I am reminded of
we talked about one other thing in terms of Trump having a green bent. He's been looking at the opportunity for renewables and talking to folks in Texas. The problem is multifold, from the fact that like the local legislation in many cases won't allow you to sell back to the grid if you put up wind farms or solar farms. I mean, there's a lot of state level legislation that really needs to be sorted out if we're going to fix these things.
Yeah, no, I agree with you. It's not like it's an instantaneous fix and he's the only one sitting in the way, but I certainly don't think he's got a green bent. And I will pull out the Bloomfield County thing, because I've just loved this forever, which is an otter full of oil saying, don't think of it as Alaskan oil soaked wildlife. Think of it as chocolate mousse. That's kind of what I'm hearing.
That was a real stupid comment, but look, we can kind of put a pin in this one and agree to disagree.
Yeah, I'm about
Fair enough, Oz.
I'm
All right,
happy. I'm happy to have a political discussion as a sidebar, but I think America is moving into hemp, green energy, solar, tidal farms. Wind farms are actually not renewable because you can't do anything with those blades. Like they're not recyclable. And so all they're doing is sticking them in landfill. So now you have a blade that's the size of like a frigging 20-story building stuck in a landfill.
There's more than just that happening in the industry. That would be a really good breakout session for us. But I agree. I don't want to get too political. I am refraining from jumping in on that debate because I know it will just fuel the fire. So Jeremy, I saw that you jumped in. Do you have some more comment around like the market and what folks can expect to see in the next week or two?
No, I mean, I'm pretty much in line with everybody. I mean, we know what's happening in the background. It's just a matter of time. There's people that are anticipating unemployment to reach 75 million. I don't know if that's going to happen or not. But at the end of the day, it's not looking good. However, on the other side, in the cryptocurrency world and in the Bitcoin world, it's rather exciting in the sense that there's some big things that are happening in other countries. I'm just pulling this up right now. The German stock exchange just listed a fully Bitcoin settled product, BTCE, as an example. I think that's a big deal. This is, something that everybody who's anybody, especially on the crypto economic side, is talking about. I think that this could be very powerful for the industry, and this is just the first step for many other governments and organizations to be able to follow suit in the same way. I know we were talking a little bit about renewables and some of the things that are happening on that side. Because we have Scott Mariano on the phone, I don't know if you're available to speak, but love for people to hear a little bit about your take on that and how blockchain can be a huge part of that. Because I think as we're talking about how we're getting to mass adoption, our next conference for collective intelligence, if you want to join us, June 25th and 26th, the whole notion behind that is getting to mass adoption. So talking about all the ways in which blockchain and crypto is helping move the industry forward and all the companies associated with it.
Can you hear me?
We can.
Everyone? Okay. Yeah, I'm not in the area where the beautiful backdrops of Brooklyn, New York, and Venice, and
not Brooklyn, Harlem. Never.
This is Long Beach, dude.
Harlem.
Long Beach.
Let's be articulate about that.
Yes, I know. That's your baby there. Thank you very much, Scott Mariano, Investor Relations, Green Tech, and where I think and what I've been building is the Green Renewable Energy Development Company, with multitude of different technologies that are actually highlighted. Oz, you were mentioning what is going to create jobs. What I think in the future here, and what I'm actually working on in Northern California, is a permaculture farm. It's going to be the first integrative incubation system growing moringa superfoods, also doing sweet potatoes for ethanol. Also, right now, I have the first organic certified seed to grow operation with hemp products. And also, when the legislation activates the legalization of cannabis, we're getting into that arena as well, the cannabis and THC market with medical doctors and pharmaceutical companies. That's kind of our goal. And then adding the renewable energy to, and Green Tech is going to be part of the initiative to grow the different farms, actually in different areas, not only California, but Argentina, we're doing a plan, Panama, and other individuals that are collaborating with us into the, in the system of bringing geothermal projects and adding value to them and saving them money on their electricity with the technology that we have. And that's happening right now. I have a 240-acre operation, and we're growing on that in Northern California. And I encourage everybody to get involved with the different technologies that are like clean water, clean soil, clean air in the environment. And that's pretty the focus that I'm working on with individuals in Silicon Valley, in the Bay Area, Northern California, and also around the world. So that's kind of where I'm looking at these new, I call them new gen technology techniques, because it's important for us for food, for bringing and saving our climate in some type of way, trying to go forward to that and making the energy and disruptive technologies to make a difference. Actually, that's what it's all about, to make a really impactful difference in the
Scott,
world.
can you talk about your the tie into blockchain and crypto and how you guys see that? Because I think that's a pretty cool point.
Thank you.
I'd really love to point out the mining aspect of the energy that they're creating as well. I know, Scott, we talked about that too.
Yes. On that, the blockchain, where we are designing, or the architects are designing, couple of contacts of mine in the Bay Area are working on the valuation of making the tokens that we have, and we're progressive into the utility token for one right now. For green tech, is our token is going to be validated by the technologies that are out there in the market. For instance, our geothermal project right now that we're finishing up with the acquisition with our advisory board and getting the documents. That's going to be a huge factor in bringing our token to value, and how the blockchain and how all the data. So as the waste management and the actual waste management, and also the energy increases, and we have these technologies out there to the market, it validates and creates more representation for our token. And so we're going to add the blockchain to, and the technologies to that token to add value. And as that brings, we need data. We need to use the data for that. We need to keep track of, okay, this is bringing so much energy to this company, to that particular farm, to this commercial real estate, to this data agency. So there's a lot of different ways that we could bring value with the blockchain connected to the green technology. So that's kind of what I wanted to stress on that. I hope that I help you, Jeremy, on that.
So Scott, I'd like to add a few more things, just because I'm very familiar with the Green Tech project and a fan. The other things that Scott didn't mention there, and I'll just do the quick Christina avalanche. They are doing, not only are they doing geothermal, they're doing landfill garbage as an energy source. They're doing solar, they're doing wind, they're doing geothermal, they're doing basically agriculture energy tracking. And all of that is, their utility token right now is being used as like a fundraising mechanism, but the intention is to evolve that token so that it is tracking the energy on the grid. They also have an HVAC energy building, energy management type of that they're running with a very big brand of hotel chains right now. And so they're literally changing everything from the ground up and creating that infrastructure that, we talk about, Oz, that's the big bottleneck, is the infrastructure of being able to deliver this at scale. And that's what they're trying to tackle. And I'm really encouraged by the things that I used to dream of, 20 years ago when I was young. Green Tech is really trying to put all of that bleeding edge technology into effect and actually help the world, and leveraging blockchain, I think, is an absolute no-brainer for that. And I'm just really excited to see their progress.
Yeah, and just to clarify, this is not a promotion of Green Tech at all. We just said, obviously here at Coin Genius, we're just really interested in how blockchain technology can move the industry forward in several different capacities. This is a really interesting project to us, and if it's done right, I think it can make a tremendous impact. So anyway, thank you so much, Scott, for sharing that, but happy to hear anybody else's thoughts in terms of this company or how other people are moving the industry forward via blockchain.
Well, people are moving the world forward via blockchain, so it's a little bit of a difficult question to answer when put in that light. Scott, I'd be very interested in learning more about what you guys are doing, you're certainly touching on a lot of the kind of well thought of use cases. And quite honestly, there's so much information there that I need to unpack it in my head a little bit before I can comment intelligently.
Yeah, I would add that I mean the thing I'm most interested in is the plasma garbage reactors. Those have a massive amount of utility across America and into Latin America specifically, since we can't export our trash anymore and New Jersey doesn't want it. And that's not just New York, that's the entire country, and most of it was sent to China before. There are challenges, I think, like we looked into something like that with a startup in New York. They want 5 years of implementation history on some of these things before they'll even consider the tech. And I mean, this goes back to like, local regulations versus the need for technology versus expediency. So I love what you guys are doing. And I think most of the tech that you have is not going to face any hurdles, but the stuff that could be really, really useful is the stuff that could just change the way that we consider things like trash. And instead of looking at it as a waste product, start looking at it as a utility that can be burned in a low oxygen environment, turned into diesel fuel on the one side and power on the other.
I'd love to be able to look at landfills as an investable commodity. I'd love to be seeing that like as a true energy source, and that people become cognizant of what they throw away, because that could be money in their pocket.
Mm-hmm.
I get excited about this stuff.
I'm just thinking we generate a lot of trash, 2 kids, dog, all that.
Mm-hmm.
New version of mine.
So I know we were kind of getting off topic a little bit and just thinking about how blockchain can impact the world in a positive way. And this is all great. Let's get back to crypto and, Bitcoin and all the things that are happening there. I just told you about Germany. I mean, like, what are your responses to what's happening in Germany and making this a settled product and the implications of that and how that could have a ripple effect across the industry?
Well, it's inevitable everywhere, quite honestly. If you get right down to it, a digital asset is a paper asset that's recorded digitally. And obviously you can do a lot more stuff with it. And it opens up a lot of different paradigms, but sooner or later, pretty much everything that you can think about will become a reality. It's only a matter of time. There is now some technology in IT. I've been talking with a few people that can handle the net asset value problem that was really standing in the way of ETFs. Being formed, and public ETFs anyways. Well, obviously public exchange traded. So, I think it's just time on that one, and, creating user interfaces and experiences that more people will feel comfortable with, and, kind of dragging the regulators along, and it will be a drag. There's no way around that. And that's probably the way it should be.
Yep, absolutely. Dustin, what are you seeing in your side of the world? I know you obviously come from the mining side, but I think a few days ago was one of the largest downward sides of the difficulty adjustment for mining in Bitcoin in history. So what are you seeing as far as all of this and how it plays into the mining side of things, and how this new hardware is having an impact on future price?
Yeah, thanks for asking. Dustin Minch here, head of mining intelligence. Having some lighting issues, so if it looks dark in here, don't worry. But I haven't really been paying much attention to Bitcoin mining, but mostly on the GPU mining side is where most of my interest falls. But we are starting to see some of the profitability pick back up. I know I had my mining farm shut down for a while now, but I'm sitting here looking at it and it looks pretty steady. So I'm thinking about turning the farm back on. And of course, for most of the cards out there, for the NVIDIA cards, which is most of the GPU miners out there, Ravencoin is looking to be one of the most profitable coins to mine right now next to Ethereum. So we're definitely keeping our eyes on that, and potentially looking at purchasing some S19s if we can get a batch in, with the we're looking at September, buying the September batch. So the mining hardware on Bitcoin mining side is definitely getting sold out. There's large farms accumulating the S19s. So there's definitely a demand there for Bitcoin mining. For those that kind of wonder, well, is Bitcoin mining dead? No, it's far from being dead. So that's essentially what we're seeing on our end. So we're kind of just paying attention to the profitability on the GPU mining side, and then just seeing, what the inventory looks like for the ASIC mining side of things, and seeing if we can, potentially get one of these miners before they do get, completely sold out. And then you have to pay 4 or 5 times the amount that you could have got it for at retail. So that's essentially what we're seeing on our side.
So Dustin, I have a question for you. So with the power of the Genius Network and all of the 300 plus folks that we've kind of brought together, we have the line out to folks like Tron Black of Ravencoin and Philip Liu of Bitmain. Like if there's anything that you need, and this goes out to the entire Genius Network, this is the power of the network. If you have things that you wanted to ask them, I mean, we could literally tap them and ask if they could come in and answer some of your questions. So is that something that would be of interest to the CoinGenius mining analytics to like get a deep dive of some of these projects that you're kind of keeping an eye on? Because I could make that happen.
Yeah, I definitely think I've been reaching out to Aeon. Aeon's another coin that I've been wanting to do like a review on, some interviews and stuff like that. There's just like some kind of like basic questions that I kind of want to ask them to kind of explain to some of the people in the mining community, because we talk about all these different blockchain terms, but like to a person that's new, they don't really understand it. Like Aeon, they're big in interoperability. Like most people don't even know what that means or what that entails or what that looks like and how that relates to the real world use cases. So
give me an example. If you had Tron Black on the line here and you were like, okay, we can crack open Ravencoin, what are some of the things that you would want to ask him? And Josh is getting excited. Like I can see it. He's like wiggling like a puppy right now.
I did introduce you to Tron. I love Tron.
Yeah, so I would want to talk to him more about the tokenization of assets and stuff like that, and how does that work when you like, are we going to ever have the ability to tokenize a piece of art or something like that? And I know that we're already doing that in some level, but like, how does that work for like, without having some form of like oracle to verify like, hey, this is the legit piece of art. I'm just using that as an example. I know that we can tokenize digital assets and run them on the blockchain and track them that way, but how does that work in the physical realm? Like, tokenizing pieces of art.
So
stuff.
if I could speak to that, so there was an older project which you've heard of, LA Token, and that was the liquid asset token. And the perspective of that was that anything from real estate to art, we could fractionalize and allow for micro investment inside of, from everyone from developing nations up, right? You want to own a piece of a Rembrandt, it would have to be verified. Now, they have run into some issues with that, and I'm not sure if they're still running that paradigm. But in terms of the Oracle, typically you'd want to use some sort of third-party Oracle or holding company. When I've gone to Sotheby's to look at some of their tech presentations, because they do tech days, they've had a couple of companies come in that will allow you to basically archive your art. So they've got completely armed storage facilities all across the country, all across the globe, that are temperature controlled, where the stuff is basically put in, it's boxed, which means it's crated. It's not in an actual box, it's in a wood crate, and they're put away. Now, the utility there could be something like, let's say that we say a piece of art has something like 1,000 units, and each unit could either be asset backed. So we could do this the way that we would do this if it was a project launch out of England, and you could allocate X amount of art as a bucket to an associated value for X amount of shares. So let's say that we had one painting that was worth $1 million and we had 1 million shares. You could say, okay, well, each share is now worth $1. And what I'm doing is I'm issuing 1 million tokens, and I'm backing each token with 1 share. And so what it does is it allows you to add art into that portfolio, and that increases the corresponding value of the shares and increases the corresponding value of the token inside of the economy. And people are kind of cool with that kind of stuff. I think where the utility comes in is more of what, we've had $40 million apartment buildings tokenized in Manhattan. And the utility there is that typically when you buy any kind of real estate from an investment perspective in the United States, you have to buy it inside of a defined unit, and that's either condo, co-op, half of a duplex, brownstone, or whatever the unit is that you're using wherever you are. What this allows you to do is to say, okay, well, if one, like let's say that one condo, which could be say 1,000 square feet, has 10 tokens associated with it, and you would have to have 5 tokens in order to have half of a voting right, because the condo boards have voting rights and there's maintenance issues and all this other stuff.
Right.
But let's say that each one of those were $10,000 a piece. So $50,000 gives you half ownership of a condo, and that's obviously not in Manhattan. That's probably like Queens. You have a utility case for people to invest in these things with the understanding of what the medium term velocity of property valuations are going to be. Now, COVID has thrown a wrench in this, so there's a lot to be seen. But the same goes for the tokenization. Like I had, Jeremy had hosted a Coin Genius session after Virtual Blockchain Week, and I kind of explained how we tokenize oil, and I could go through that again. But,
are you tokenizing? So like with Ravencoin, when you tokenize, that would, because the one thing that I'm kind of missing the gap on is, like, say I tokenize a digital sword, like, because we know we can tokenize digital assets, and I tokenized it for 500 Ravencoin, but then the price of that Ravencoin went up. Like, so how does that work? Do they lock in like a stable price, or do they just lock it in 500 Ravencoin and that's it?
Right.
Like,
so there's a lot of different stuff to unpack here. Ravencoin's use case in particular is basically, a Craigslist-esque listing area for assets that are denominated in Ravencoin, as like all supply and demand tokens. As the price of Ravencoin goes up, the denominated pricing for those assets will go down in terms of its Ravencoin, even if its fiat dollar amount basically stays constant.
Okay.
But, in terms of the question you initially asked, I think it's important to distinguish, what Oz is talking about is basically securitizing assets. Mm-hmm. So he's turning it into shares with votes and such, and that exists now in the paper world. The other way to deal with this is to, make the tokens actually represent the assets. And in the real estate context, instead of it being shares, that's actually going to be a piece of title. And the only way that that's really officially done is if the county recorders in various places adopt it, so that you can truly tokenize it. Other than that, you're working with the same type of real property analysis that you can currently do. There's other aspects of this also. So you've got Oracle services by Chainlink, which I love. And to answer your initial question, you need an Oracle. If you're going to connect the real world with the digital asset transfer of value, there needs to be something that tells the digital asset to move.
Right. And I think the big question that I face with oracles is, are we there yet? So the big issue that we've seen with oracles in the past is they could be compromised, right? They could be.
Oh, I'm so glad you asked. I have a dream. I've written about it on LinkedIn.
Right.
You need 2 different levels of distribution. You need your distributed ledger that reports what the Oracle reports, but that in turn, ideally, is derived from a distributed set of data sources.
Right.
So the way Chainlink works is there's a reputation system on the data sources. So if your data source is not very good, it gets downvoted and nobody uses it, and you don't get paid for your data. What would be really ideal is if for any particular fact there were 10 different primary source data sources. So to give you an example of that, let's say you're looking to predict a weather pattern or something like that, and it triggers, and you've got 10 different satellites that are operated by 10 different operators that are all sending in fact data about what they're seeing. That's a really good set of facts. I mean, it's really going to be hard to fake that.
Right.
To the extent that you can get lots of diverse primary sources, you have a much better shot of verifying factual information in the same way that on a traditional distributed ledger, you have a lot of different validation nodes that have to agree on something. This is a really, really hard paradigm in the real world, but it's the end of fake news, which is why I have a dream.
Yeah. I mean, it's like, I know that we're getting close to that, but I've had very in-depth conversations about this in the past, and we could go on for 3 hours about oracles, but I don't want to do that here.
We could.
So,
we definitely could, guys. I have to bring something to everybody's attention right now. If you're not watching Bitcoin, as everybody knows, has been hovering around 97, 9,800, just spiked to over 10,000 on Bitcoin or Binance futures, and now has dropped back down significantly to 9,700. So,
why?
Why? Because of this conversation.
While we have been on this very whatever we're calling it, Genius broadcast, the Fed announced that it doesn't see a rate raise until 2023.
Yeah, there you go.
I do want to mention we did see a nice little pump on PegNet, almost 60% one day. So.
Yeah, a couple of calls, Dustin. You've had a couple of calls that have kind of mooned over the last week or two. And Jeremy, your point, as we know at CoinGenius, the event trigger for BTC is if it crosses 10K and stays above 10K. That seems to be what everyone is looking for right now. And we saw last time with the March slide that BTC is not a store of value when it comes to being able to pay your bills. People will liquidate their BTC. It'll be interesting in this next slide as we're getting into July. Definitely by August, we're going to see another, impact from supply chain and recession type of things. It'll be interesting to see if BTC stays above 10 or if it dips all the way back down. So there's a lot of speculation in the trading channels right now around BTC and that 10K point.
Yep. There's a lot going on right now. The other thing that I wanted to ask Josh specifically, and Oz, you might have some color you want to add to this as well. So somebody basically transferred, what was it, 0.55 Ether. I think this was yesterday or late yesterday for $133. And their transaction fee was, what was it, $2.5 million.
Yeah.
Right. So there's a lot of people speculating as to what this could be. Was this on purpose? I want to hear from you from a legal standpoint, right? Let's just say this was done. I don't even know where it was done in the US or whatever the case may be. Is there a benefit to transferring that much as a fee versus transferring that much in ETH? Or is it just simply a mistake?
The answer to your question is, if somebody can figure out how to work stuff, there's all kinds of things you can do. From a tax perspective, I could see something where, some kind of tax mechanism or potentially tax fraud. But I'd be interested to know technically how somebody would actually do that, because I don't think can you guide where your transaction fee goes? I'm not an Ether guy, to be honest. I don't know. Yeah. I don't know, Dustin, if you have an idea.
That transaction get verified, and man, I wish I was the miner that verified that transaction if it did go through.
But I mean, how would that happen?
That's all I got to say. That's all I got to say about it.
I mean, the miners control to some degree the gas prices, don't they? I mean, it just...
You can set your own gas price in Ethereum. That's a problem, and that's something that they're trying to solve. There's been plenty of mistakes like that in the past, and the Vitalik, the head of ETH, if you will, just assumes that this is just a mistake and just somebody messed up the decimal points.
Yeah.
I'm picturing my 3-year-old at the keyboard of my computer. No.
Well, that actually brings up a really good point for ETH, which is, if I recall correctly, the news story is that ETH 2.0 is coming out, and ETH has been hovering basically like around that 300 mark, and then we saw it go down to like 170, and then it's like 220 and all over that stuff. The ETH 2.0 news sent a ETH spike in price. I imagine that when that actually goes out, because ETH 2.0 really reinforces ETH 1.0 and all of the apps that are built on top of it. Now, this is my understanding. I have to do some more research, DYOR, but I would anticipate to our audience that once those ETH 2.0 announcements are coming out, you're not going to see ETH under $300 again.
Mm-hmm. Well, first of all, this is not financial advice in any capacity. Do your own research, especially with Josh on the line there. However, how I'm looking at it particularly is, I've said for a long time, for me, I personally feel that anything below $200 was an absolute steal. I got in at 110 and foolishly got out at 130. I don't even know why that happened. I should have just held on to it. That would have been a great price to get into. But I think there's going to be another opportunity. I really foresee that happening before any massive bull run occurs. Typically, looking back historically at Bitcoin price or any other price of any other asset in crypto, you're going to see a significant drop in excess of 20 to 30% before you see the next bull run. I think that's happening. I think there's a lot of different factors contributing to that. Macroeconomic factors. You look at the price of the dollar. You look at the Fed's activities and all the things that they're doing, especially keeping the rates, stable for, like Josh said, for the next, 3 years or so. There's a lot at hand here and a lot that plays into the future prices, but we could see a particular situation if you follow people like Raoul Pal, talking about the dollar milkshake theory and potential short squeeze situations of the US dollar. Whether it's going to happen or not, I think it's all on the table at this moment. And if you look at trading pairs of BTC versus USD, you can imagine what can happen to the price of USD if the price of the US dollar goes through the roof. So with that said, it's going to be interesting to see how it plays out, but I strongly feel that we're going to see another buy the dip type of opportunity in excess of 20 to 30% over the next, month or two.
Awesome. We're reaching the top of the hour, and just to kind of put a pin in all of that, do your own research, right? It's a very rich tapestry of opportunities that we're seeing here. Josh and Oz, would you guys like to do some final thoughts, and then I will wrap up with the Coin Genius announcements?
Sure, Josh. Okay. So we're entering another new phase. We are living in history as it is being made. We are seeing a massive disruption of the financial markets in ways that we've never seen before. We're seeing a disruption of supply chains in ways that we've never thought about. We have the opportunity to rip all of the middlemen out of all of these processes. And we have the opportunity to build things on blockchains, to build things in new ways that's going to basically fit the needs of the next century. The time for the rise of the new Andrew Carnegies is now. The time for the destruction of journalism is now, in terms of what it currently exists as, because we're peppered with the same amount of opinion pieces and fake news as they were in the 1920s and 1930s. The parallels are all there. And the oddest parallel is the fact that we're dealing with our own version of the 1917 pandemic. From a data perspective, there was a spike, then there was a quarantine, and then there was a bloom. That's what happened in 17. We're going to see that again, but I think instead of it being in August, it may potentially be in late July to mid-July, largely because these protests where you had CNN as well as CNBC, NPR, and a variety of other news outlets saying it's unsafe it's like for COVID, you should stay home and keep your business closed unless you're going out to protest, which I honestly think is not just disingenuous, it's criminal, because a lot of people are going to die over this. But that's the state of affairs right now. Markets are going to continue to buoy for a period of time, but when we see things hit, they're going to drop. And at the same point in time, things that we've talked about, oil, other commodities are pieces that we really need to keep our eyes on. Because think about this as well, the PPE supply chains that we're talking about. What happens if the raw materials go out? And then lastly, from a crypto perspective, buy Ethereum. Why? Because right now, if you're not in it, you could spend $50, get a little bit of Ethereum, park it, forget about it. Because we're going back up. It's not necessarily going to go to the 1,000 it was in 2018 in January, but it'll definitely go higher. And I think there's a lot of utility in being not involved in Bitcoin. If you're going to sit there and whine and complain that you couldn't get in at cheaper prices, get into Ethereum, because we have our reserve currencies and we have our purchasing currencies on the rise, and the time is now.
So I actually agree with pretty much everything Oz just said. And in fact, the point about the rehash of 1920s news sources and yellow journalism is one I hadn't thought of, and is very, very telling. So thank you for that. I think the idea that a lot of the the stimulus checks have gone into asset purchases is correct. And I think that that's going to result in a lot of that stimulus check finding its way overseas to people who trade more efficiently than some of the people who are retail investors trade here, which is certainly not what was intended. We're not going to see jobs coming back. I mean, I'm a business owner, and I can tell you that my most detested line item expenses is labor, because it comes with the most strings attached to it. It's a royal pain in the butt, quite honestly. To the extent that I can minimize that, and to the extent that I've now been taught to minimize it, because I realize I can get by with less, that's happening, even for businesses that survive. And then you've got the whole automation thing that we've been talking about for years. I think we've seen the beginning of what will be continuing universal basic income at the end of the day, even if people aren't talking about it. And my running joke is, if we're printing up trillions of dollars, why am I still paying taxes? So it's a giant paradigm shift, and I'm not entirely sure what to make of it. I can tell you that silver is at $18.25 an ounce right now, so that's popped substantially from what it was. Gold is holding strong also, and that kind of aligns with the crypto thing as well. I'm always going to prefer the altcoins with actual use cases. I think Bitcoin is, it may be sacrilege to say it, but I think it's a non-functional legacy technology that didn't satisfy its use case of being transactional, and everything is a store of value.
But there's Lightning, okay, and Lightning hasn't even started to be utilized, and there's a lot of use cases for that inside of Bitcoin. But I actually agree with a lot of where you're going. I just wanted to mention, and sorry to interject.
No, it's okay, man.
The second wave just hit. Bloomberg's reporting that now.
Is it? Yeah, I think that makes sense, and that actually doesn't even take into account Brazil and Russia and India, who I think are going to far surpass us at the end of the day.
Yeah. There's, it's interesting being in CoinGenius's inner network, because we talk about this stuff so much with you guys that, the three of us talking here, we take a lot of things for assumptions because we understand the landscape. And so we don't dive into it as much here in these calls because it's just common knowledge on the CoinGenius team. So a lot of what Josh and Oz are talking about are in our previous recordings and in the documents that CoinGenius puts out to the world. So awesome. All right. Well, we're a little over on time, so I have to wrap up for today, but thank you guys for your comments. I really appreciate the insight. And Scott, thank you for joining us today. Tom, I see you over there. I know you didn't get it this week, but really appreciate you guys joining and listening in. I always appreciate the debate whenever Oz is on here. He polarizes things and everyone has an opinion, so it's always a fun time. So that being said, you guys, CoinGenius is putting together our quarterly event on June 25th and 26th. It's a 2-day event. First day is panels, the G-Tank pitch competition, which is Shark Tank for blockchain, and teaching investors how to really quantify this landscape, understand blockchain companies versus a crypto tokenomics-based company, and all of the things that go into being able to deploy capital effectively. Day 2 is going to be breakout sessions, pioneering the CoinGenius University and the CoinGenius network of geniuses that are actually going to teach our community in 30-minute segments, 20 minutes of presentation and 10 minutes of audience Q&A. The ticket to get into that and being able to ask your questions is $99 for both days of all the VIP events. And you can actually go register on our website right now. The other plug I'd like to do is the CoinGenius Discord, which is the fastest way to get a hold of our team if you have burning questions and you actually need some market analysis answers right now. Go to the CoinGenius Discord and log in. You can tag myself. I'm at GirlGeniusXV. You can tag Jeremy, he's Genius01. And you can tag Dustin, our mining at, Dustin, I forget. I know it's not Crypto Miner Tips. What's the one that you have in our Discord?
What do you, my name in
yeah,
Discord?
What's your tag in
It
Discord?
should be Crypto Miner Tips.
It is Crypto Miner Tips. Okay, great. And then our head of research, Steve Kwan, which is Ditcoin. So if you guys have questions, feel free to ping us directly. That's what it's there for. We want you guys to be informed and YOR.
If it's before 5 a.m., call Jeremy.
He's probably awake and watching the market, so it's you
right.
won't interrupt him.
It's before 5 a.m. Ping Jeremy.
Dustin's like, those are off hours, man.
Yeah.
All right. Thank you guys so much for joining us. Does anyone have any last comments or goodbyes before we wrap?
Thank you guys for having me.
All
Thank
right.
you.
Bye.
Yeah, it's good seeing
Thank
everyone
you,
again.
everybody. You're
Everyone.
awesome. Awesome group.